And you can see what we expect to happen between, well, really the next 5 years. The Mag 6, some of them will do well. Some are facing headwinds. Apple's in the AI space are well documented. And now we think it is truly disruptive innovations time to shine in the market. Our official for bull case is 1.5 million.
Okay.
Now what got us to that 3.8 is using modern portfolio theory. If we were to include Bitcoin in portfolios at its optimal weight, so maximizing the Sharpe ratio, that would have provided that increment to 3.8 million.
Over the next 5 years, the market is set to split in two, traditional giants facing headwinds, and disruptive innovators finally taking center stage. According to Ark Invest CEO Cathie Wood, this shift could push Bitcoin's fair value to $1.5 million, and in a bullish scenario, even $3.8 million. As artificial intelligence transforms industries and boosts productivity, she believes capital will rotate out of overvalued legacy tech and into assets that truly represent innovation. Bitcoin, she says, stands right at the center of this transformation, a digital asset that embodies both growth and protection. Cathie Wood calls Bitcoin the most powerful asset of the coming decade. In her view, missing this massive rotation into innovation could be the biggest financial mistake of your life.
Here is a timeline of innovation. And you can see it goes into the 1700s. And our chief futurist, Brett Winton, in conjunction with academics, pulled this together. And what you're seeing here is the impact of innovation on productivity. And you can see in this time, we've had two great eras. The first one was in the late 1800s, early 1900s. Telephone, electricity, internal combustion engine, huge boost in GDP growth. And in fact, prior to that, for the 400 years prior to that, real GDP growth had been averaging about 0.6% per year. Very slow. After that, we went into a 125-year period of 3% real GDP growth. So a five-fold increase from 0.6 to 3%. You have to move forward to today to see multiple innovation platforms evolving at the same time. So for the first time in 125 years. This time there are 5 platforms, not 3 major platforms, and they involve 15 different technologies. This is very important in terms of how to research and analyze the world. It's not going to be by sector or industry anymore. It is going to be by technology, because technology is permeating every sector, every industry, and blurring the lines between them. So you can see 5 here. We believe that the productivity uplift here is going to be so strong during the next 5 to 10 years, and I think President Trump's tax package is going to turbocharge this, that real GDP growth will accelerate from that 3% where it has been for the last 125 years towards 7% plus. And we think that could be conservative. That's a little more than 2 times as opposed to the 5-fold uplift before. So get ready. But the other thing that we think is going to happen is that inflation is going to surprise significantly on the low side of expectations. We would not be surprised to see 0% inflation or less as we exit the tariffs here and the way they're getting through the indexes and move forward into this new age of technological explosion. One of the reasons for this explosion is not just the 5 platforms, so I should have named them: robotics, energy storage, artificial intelligence, blockchain technology, and multi-omics sequencing. 5 major platforms involving 15 different technologies. And here you can see why we think we're going to see explosive growth. It is the convergence between and among these technologies. So just to give you two examples of convergence. In the autonomous mobility space, that is the convergence of robotics, energy storage, and artificial intelligence. Now, each one of those technologies or platforms is following its own S-curve, and we are moving into the sweet spot of the S-curve now that autonomous taxis are debuting in the case of Tesla in Austin and San Francisco. Waymo's been there for a while. Just think about that. One S-curve feeding another S-curve, feeding another S-curve. That's why we're going to see explosive growth. Another example is in the healthcare space. While the autonomous mobility space might be the biggest revenue generator in the short term, we believe that the most profound application of AI is in healthcare. And that's the convergence of sequencing technologies and artificial intelligence and technologies like CRISPR gene editing. And I think this is the sleeper. It's the most inefficiently priced part of the market. So you can see why it's going to be so important to set up research departments by technology, not by sector or industry. And on this last page here is what we think is going to happen to the equity market in terms of valuations. So you can see in the turquoise there, that's the Mag 6. The Mag 6, it used to be called the Mag 7, but they threw Tesla out when it wasn't behaving like the rest of the Mag 6. So you can see from 2019 to 2024, the Mag 6 tripled. They tripled in valuation in the market cap. Whereas truly disruptive innovation in the purple at the bottom there went up only 30%. And that's because investors were playing it safe, and they were investing only in the largest, most cash-rich stocks in the market. That was a very difficult time for innovation, for venture capital generally. And you can see what we expect to happen between, well, really the next 5 years. The Mag 6, some of them will do well. Some are facing headwinds. Apple's in the AI space are well documented. And now we think it is truly disruptive innovation's time to shine in the market. I feel as though a rubber band has been stretching for the last 4 years, and it let go with the election of Donald Trump. That's when truly disruptive innovation started to shine, and the stock market started to broaden out from the very concentrated Max 6 strategies into much more widespread disruptive innovation. In other words, risk appetite and time horizon is starting to extend.
We're entering the most explosive era of innovation in a century. 5 forces, AI, robotics, energy storage, blockchain, and multi-omic sequencing, are converging to boost global growth and drive inflation towards zero. From AI-powered taxis to gene-edited healthcare, each breakthrough fuels the next. Cathie Wood says the era of hiding in big tech is over. True disruptive innovation is about to take over.
And I think the tax package, especially the corporate tax cuts, which most people haven't focused on, full depreciation of structures first year they're put in service, full expensing of equipment, R&D domestic and software in year one. These are huge incentives to invest now. And I think that's exactly what's going to happen. When you can see the difference here, the truly disruptive innovation we would expect, now we did this chart at the end of last year, during the next 5 years to deliver a compound annual rate of return of roughly 50%. Now we've had some of that, so maybe it's 40 to 45% compound annual rate of change. And this is in the public equity world. In the private world, just wait until you see.
You're projecting in 5 years, Bitcoin hits 3.8 million per coin. That's 5 times the market cap of gold, which has hit an all-time high. Walk us through the math here.
So I'm going to just correct that a bit. So,
okay.
our official for bull case is
case.
1.5 million.
Okay.
Now, what got us to that 3.8 is using modern portfolio theory. If we were to include Bitcoin in portfolios at its optimal weight, so maximizing the Sharpe ratio, that would have provided that increment to 3.8 million. Now, believe it or not, that position size, when we did that analysis, was 19% of a diversified portfolio. There are ways to access innovation, and one of the questions, many ways, of course, we have packaged it up. We don't look anything like a traditional benchmark, so if they're diversifying, we're a very good source of diversification, especially in trying to get exposure to innovation. We also have a venture fund. One of the questions I get regularly from retail investors used to be, why can't we access the private markets? We know more about those technologies than most of the institutions who are buying them. They have no idea. We're passionate about it. And so we've gotten more vocal, and this administration is certainly becoming more vocal and more focused on this particular idea, because it is un-American, right? I used to say, it would be what we're doing in the investment world right now would be the equivalent of saying you can't drive because you don't make enough money or you do not have enough net worth. Take a test. So the risk question, obviously we get a lot because our portfolios are volatile. They don't look like the benchmarks. And when markets get into a bearish period, investors tend to hug their benchmarks, and we're moving in the opposite direction. So I just want to say we do what we do, and that's what our advisors expect. They don't expect us to raise cash or do anything. That's their decision, right? In terms of what we do to control risk, during bear markets, we will concentrate towards our highest conviction names. We have a scoring system based on management, execution, moat or barriers to entry, product service leadership, valuation importantly, and thesis risk. So with those scores, we concentrate. During bull markets, which I do believe we are in a bull market that is broadening out, we tend to diversify because the IPOs start appearing again, and we have more information on some of the companies we've sold during the bear market.
Give us the read on Elon's $1 trillion pay package.
You know what's so interesting about it? And this happened with the first model we put out. We put out a model once a year of Tesla, and with our price target 5 years out. We looked at his first package and we said, that looks like our model. And we looked at this one, we said, that looks like our model, and our model is
Your
public.
10-year forecast has Tesla at 8.5, 9 trillion.
Well, right. And we put out there 5 years.
5
worth.
years.
Yeah. So, and I think if he delivers on humanoid robots the way he thinks he is, we don't have enough in there. So our price target is 2,600. I think it's at 330 today, something like that.
Exactly.
Yeah, 2,600. And we have very little for humanoid in. But what Elon is capitalizing on is this convergence that I mentioned. Robotics, energy storage, and AI. That convergence in the robotaxi space is pretty much the same convergence in the humanoid robot space.
Trump's new tax incentives could spark one of the biggest waves of corporate investment in history. With full expensing for research, equipment, and software plus lower tax rates, companies are being pushed to innovate faster in fields like AI, robotics, and energy storage. Cathie Wood believes this shift could send Bitcoin to $1.5 million and drive huge growth in innovation-led sectors. Tesla stands at the core of this transformation, as Elon Musk's push into AI and robotics could mark a new leap in productivity and wealth creation. Do you think these tax incentives will truly ignite a new innovation boom? And could Bitcoin or Tesla lead the next major wave of growth? Share your thoughts in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.